So again, welcome back. Now, some energy experts are cautioning the incoming administration to manage challenges in the energy sector urgently. According to the Africa Center for Energy Policy, ACEP, this is imperative because power supply from the nation's hydropower sources are still unreliable. On their part, Kumasi Institute of Technology and Environment, KITE, is urging government to focus on alternative sources of power to prevent a possible energy crisis in 2017. The executive director of KITE, Ishmael Ejekumihene, warns the cost of power production will surge next year if government fails to address the high cost of utility.
There are any quick fixes when it comes to one's indebtedness. If you owe several millions of dollars, unless you're able to defer the repayments, like they were told they were going to issue bonds and have it paid over a period of time, then there are very little options than to look for money to not just run or provide the recurrent expenditure, but also to find a way of making sure that you've dealt with the debt situation once and for all. So in the short term, and I don't know what we define as the short term, we really must make sure that we have crude oil to run these plants. Ultimately, somebody has to pay for it, but we need to ensure that we have crude, because if the Jubilee fields are going to be shut down because of the FPSO, the problem with fixing the FPSO. So it means that we need more crude, light crude oil, to power the thermal plants. The good news now is that we do have installed capacity. We do have the plants. If we have the fuel, we should be able to keep the system running.
All right. So not to cut about, what do you think would be the best strategies that we could use in order to finance these debts?
Well, as for the debt, somebody has to pay. The bottom line is that the utilities are owned by government. Their VRA is 100% state-owned. ECG is 100% state-owned. So when a business is running at a loss, normally it's the owners who are supposed to recapitalize the businesses. I doubt if our governments will have the money to clear all those debts. So I think the strategies are what they are trying to do with the banks, which basically is saying that let's try and turn all these debts into bonds over a period of time. So that's what I believe they are renegotiating with them. If we had options, I would have said that let's clear those debts by paying directly so that the utilities can be made to stand on their own and start on clean sheets once we are determined not to repeat the mistakes that brought them to where they are in the first place. But in the absence of the ability to just pay off significant proportions of these debts, we may have to settle with these bonds that they are trying to do. But there are pressing cash flow situations, like getting money to buy the crude oil that we need whilst the Jubilee fields are down because of the FPSO problem.
All right.
Now, the Association of Ghana Industry, AGI, has confirmed that some industries are indeed planning to lay off some of its workers from next year. Some firms, including Pioneer Food Cannery and GTP, have all maintained they might be forced to lay off workers because of the current economic environment. Chief Executive Officer of the association, Seth Chuma Kwabwa, tells Joy Business something must be done quickly to halt the situation.
We've stabilized the power since the beginning of this year. Let us continue with it. If it comes down again, business confidence will be so low, and when it's affected like that, then it can also have an effect on further investment of local investors and foreign investors as well. So this Ghanaian, they can't resolve this power issue. So if I plan any investment in the country, I won't even come at all, because I don't know what is going to happen to me in the next couple of years. So we need to restore business confidence in that light, and therefore we should prevent it. And then, of course, once the power is not very reliable, the cost of production goes up, because they must substitute that with generators and other things which are much more expensive than even the current situation. So I don't think it's good at all for businesses. If there's any plan for layoffs, I think that it's all about business confidence. If you're able to restore business confidence, if you're able to get interest rate regime and the macroeconomic environment that support business, I'm sure they will really look at it. Once they are confident that things will improve, I'm sure they would rescind their decision. But at the end of the day, businesses operate on the basis of numbers. I look at my bottom line. Can I continue sustaining what I'm doing? If I cannot, I have no choice than to reduce. So we need to look at it on case-by-case basis. Going to the extent of actual layoffs, not many companies have told us about it, so we can't say that there are so many companies that are going to lay off people. The Pioneer Food Cannery one is an example you are citing. They've not written to us officially, but informally we've heard these things. Some of them have told us that they will need to carry out some reforms to be able to stay in business. So that is one or two cases that is going to happen.
It's on Business Live, and it has always been argued that the rate at which government borrows from the market often serves as a benchmark for interest rates. Therefore, with the recent consistent decline in treasury bills, that should have come as good news for businesses. Now, joining us in the studio for some analysis is economist with Data Bank, Courage Marty. Now, Courage, good evening.
Good evening.
All right, so there has been always this contention that excessive government borrowing also crowds out the private sector. Now, this particular development that we're witnessing, declining treasury bills, could it be the fact that government is now or is no more borrowing or has reduced borrowing consistently?
Well, I think government is still borrowing, and you see that always on a weekly basis when the government issues the treasury bills. And what you notice is that there are uptakes sometimes below the expected maturities. Now, what happens is that the government will issue a treasury bill of, say, X amount of money, targeting to use that money to pay off debts that are maturing in the same week. Okay. Now, there have been times when government has consistently borrowed significantly above the amount maturing. So government then will be piling up the debts and then taking that excess funds away from the private sector. And that was what exerted upward pressure on interest rates. But in recent times, at least since October this year, what we've noticed is that the government has continued to issue bills, but they've not been taken in excess and above the maturity. So there are times when they take below the amount maturing. There are times when they take just marginally above the amount maturing now. So this has eased the pressure on interest rates, and we are seeing the downturn in interest rates.
All right. Now, so what does it mean for businesses? I mean, declining treasury bill rates. What does it mean for businesses and individuals as well?
Well, you rightly stated by saying that it serves as the benchmark. Normally, when a businessman would go to contract a loan, the lender would always look at a risk-free rate, in this case, the treasury bill rate, plus the risk premium that is assessed upon the businessman. So when the risk-free rate goes down, the benchmark will certainly have to go down. So it appears to be good times ahead for businesses. But the businesses would also have to look at the lender's position or risk appetite also, because currently you look at the banking sector and the NPLs ratio, that's the non-performing loans ratio, is still quite high, about 19%. Our expectation is that by the end of this year, the latest figures will go below 19% because government would have restructured the VRA debt and so on and so forth. So the NPLs ratio should go down. Now, when we get into 2017, given the lower interest rates, banks will no longer have to hold government securities. They have to give out that loan. And so with the lower non-performing loans ratio, their risk appetite should increase, and then they should be able to give a lot more credit to the private sector.
All right, so like we can see, the treasury bill, the current treasury bill rate, 91-day is going for 16.5779%, and 182-day is 17.2946 is for 91-day, and the 182-day rate is 18.7988. Now, could we witness a situation where we could have further lower rates, treasury bill rates?
Absolutely, we can. I mean, I'll take you back to the previous IMF program that ended in 2012. Okay. At the time, the IMF program was about getting to the end. That was in 2011. We had inflation in single digits at an average of 8%. And then we had a situation whereby the fiscal space had improved to the extent that government need not borrow so much again. And because of that, the pressure on interest rate eased significantly, and we saw a decline in the interest rate. And we had 91-day and 182-day ranging between 9% and 12%, you know, and about 12% was the maximum we saw at the time, around 2011. So when government get an improved fiscal space to the extent that you don't face a liquidity crisis that you have to go and borrow. And if inflation continues to go down, then the risk premium that is charged on funds that are given to the government will reduce, and then we could see interest rate going down. So I expect generally that as we go into 2017, when inflation goes down and government finances improve and they won't need to borrow so much, interest rates should come down.
Does it correspond to lower interest rates on the markets for businesses, and in that regard, lowering cost of credit for businesses?
In theory, it should, but in practice, you don't tend to see it. And the reason is not far-fetched. Like you said earlier, the treasury bills just serve as the benchmark. But there are other things that affect the risk premium that is charged upon the amount that is finally given to the private business. For instance, the credit risk that the banks perceive about the business would depend on the investment plan of the business, would depend on the financial position of the business, would depend on the collateral of the business, would depend on the credit history of the business. So all these things will be factored into determining the risk premium. So if there's a situation where the banks still considers the business as risky, or the investment or the loan purpose as risky, it may not significantly, result in a decline in interest rate. So there are other things we need to sort out. Structurally, it's difficult to determine when next you meet an SME. The next time you go, some of our SMEs are not quite stable. You meet them at a point today. The next time you want to go for monitoring or visitation, you notice that they've moved shop from that position to somewhere else. And then identification system. It's difficult to give an identification system that is so reliable. You give landmarks and so on and so forth. Now, difficulty in giving a very good direction to your business site or your residence is one major factor that affects credit risk. And if we sort out these things, then we should be seeing a sustainable decline in interest rates.
But obviously, individuals will not be too happy, because if I have invested my money in treasury bills and the rates are going down, it means my returns or on the particular the bill that I bought also goes down. Is that so?
Yeah, absolutely.
Yes.
But that's not the full story, because there are other sides of the economy that you can stand to benefit from. For instance, when interest rates were high, what we noticed is that the equity market investors lost, because investors moved away from the stocks market into the fixed income market, buying bonds and bills and so on and so forth to benefit from that. And so the stocks market suffered, because of the movement away from the stock market into fixed income market. Now, when interest rate starts going down, then there will be no incentive to continue to flow into fixed income market. You then have to redirect capital back into the stock exchange or the stock market. Sure. Then you will see the stock market bouncing back again. Right. And so there's always going to be an opportunity at one sector of the economy or the other.
All right. Okay, finally, before you go, are we going to experience a sustainable trend?
Well, the downward trend will depend on the inflation outlook. We expect it generally continue to go down, and so this reduction can be sustained generally. But in the first 2 quarters of next year would be very critical, because that is a time when government borrowing tends to be quite high, because government finances are not quite good during the first half of the year. And so the decline may be slower in the first half of the year than we normally see. You also recall that in 2015, we had interest rates remaining at 25% until the 4th quarter of the year, when it dropped to 22%. And it's the same thing we saw this year, remaining at 22% during the first 3 quarters of the year. And when we got to the last quarter of this year, we started seeing the decline again.
All right, thank you very much. Viewers can quickly have a snapshot again of the current rates going. 91-day Treasury bill rate is now going for 17.2946%, and 182-day Treasury bill almost 8%, while the 2-year note is going for 22.5%. Thank you very much, Mr. Marty, for your time.
My pleasure.
Meanwhile, managing directors of some commercial banks say it might take a while before the impact is realized on the interest rate market. Robert Lehunt is the boss of HFC Bank.
There's a lag effect, but it happens. For information, the banks set their minimum lending rate, all right, based on a formula given to them by the Bank of Ghana. A big component of that formula is the T-bill rate. So the minimum lending rate, which you must understand, banks are compelled to have to do, is driven to a large extent by that T-bill rate. Now that the T-bill rate is falling, you will see, based on that formula, the minimum lending rate to banks will actually also fall. So it has just happened, and therefore I expect as banks go meet in their ALCO meetings, which happens in most banks probably once a quarter or once a month, you will actually see that minimum lending rate actually coming down. So I expect that it will happen soon. Thank you very much.
Now, away from that, GOIL has embarked on strategic acquisitions of some smaller fuel service station outlets. This is because of the huge debt overhang and some other challenges which are threatening their continuous stay in business. In an interview with Joy Business, Managing Director of GOIL, Patrick Kwame Akoli, said the company is taking the advantage of this to acquire selected service stations to further expand its operations in the country.
There are about 35 oil marketing companies across the country, retailing various petroleum products including diesel, liquefied petroleum gas and gasoline, among others. Unfortunately, the economic environment for some time now has been a disincentive to many of these businesses. The government's indebtedness to bulk distribution companies runs into some billions of cedis and affecting the downstream petroleum sector. Managing Director of the largest oil marketing company in the country, Patrick Akoli, said the company is expanding its operations through the acquisition of many service stations belonging to smaller operators struggling to stay in business. He said GOIL is looking forward to dominating Ghana's downstream sector in the near future.
Yes, as of now, we have about 250 stations. This year, we have acquired 20 more stations. So we do these things.
You've acquired from the small OMCs?
Yes, because they are really in distress, some of them. Okay. We've taken a lot of bank loans they cannot pay because the industry is such that the margins, people don't know, the margins are so small. So if you don't do things right, you collapse.
So are you looking forward to acquiring more?
Sure. Why? We want to be in every district. We want to be everywhere. GOIL should be a household name. You know, GOIL should, every Ghanaian should feel proud that GOIL is in the area.
Patrick Akoli explains plans in place by the company to enter into other African markets.
And then we think it is time to move to the sub-region, Sierra Leone, Liberia, Guinea, where a lot of mining activities are now taking place after the Ebola scare, because these are countries that are coming out of war. So we have already sent scouts there to look at the terrain and see how we can go and play the game over there. So GOIL has a future because of the things that we are doing. We are putting out facilities at Takoradi to start serious banking business.
Joy Business will be observing the impact on the competition and the benefits to consumers of such strategic acquisitions.
All right, some traders in Kumasi and Accra are said to have reduced their prices generally in solidarity with the victory of the MPP in last week's election. My colleague Kuku Aban toured the spare parts hub at Abosokai and has filed this report.
We are currently at the Abosokai spare parts market, where we understand prices of their products here have been reduced drastically following the election of the new patriotic party into office for the year 2017. And I have a driver who tells me he's bought a fuel pump this morning, which has been reduced for him. Let's find out from him exactly by how much. Good morning.
Good morning.
Pacho,
you're from Yawasari.
Yawasari. Now, what's your fuel pump in it?
You fuel pump in there. Last week I say, last week I buy almost for 3.5.
My fuel pump got damaged last week, and when I came here to buy one, they told me it was going for 350 cedis. But now they've slashed it to 200 cedis, saying the incoming government has assured to reduce the taxes on imports. I have so many other friends who also have benefited from this. We hope this will continue so we could make enough profits to cater for our families.
So you just had a taxi driver tell us that a fuel pump which was going for 350 last week is now going for 200 Ghana cedis. Let's enter this system shop and find out also what the situation is like over here. Minya, me watching.
Major Sobrapani.
Number 12 Frozen.
About your friend Philip O'Day.
Okay, me also talk car tapes, ni speakers, ni ade waha. Business is saying.
Business boko.
You drive a big car, see our fuel pump or toy, or see 350 cities na no ton last week, and now turn 200 cities. Also, near my at the saying.
Me patch us at pepe. Emra, ye two abana ye decree and ye penny for me at say. And now I'm saying I'm able to tax in the bathroom. And say, and your man, near the might to say 500 Ghana cedis. Say, on base you. I
have also reduced the prices of my products. I was just last week selling this video player at 550 cedis because I was buying it at 500 cedis. Now I am selling it for 500 cedis because it's been sold to me for 450 cedis. We are only praying that the party will keep its promises so that we could continue to reduce the prices.
Interesting developments there from the spare parts hub at Abossey. It's still live on Business Live. We're taking a short break. When we come back, it will be time for the interview of the day. Thanks for staying. Now, telecoms giant MTN Ghana says it has systems in place to avoid any serious disruption to its services. The assurance follows a major interruption in its voice and data services last night, which made it difficult for subscribers in some parts of the country to make calls and access internet on their handsets. But MTN is attributing this challenge to a problem with its technical internet protocol system, which supports data and voice calls. Mohammed Rufai is Chief Technical Officer at MTN Ghana.
You know, the signals we carry your voice calls on transmission, what we call transport. So we transport your calls on the IP network using the IP protocol. So it's internet protocol that we use to transport your calls around. So this particular node controls the movement of those calls, and that is what had a problem, and we activated the redundancy, which the node was fully redundant anyway, so we quickly put in the redundancy to restore the service.
Explain to me, what measures have you put in place to ensure that for me as a subscriber, my concern is that I will not experience this thing again? Or what do you have in place, or do you have the systems in place to ensure that we don't witness this thing again?
All our critical nodes have redundancy. All our critical network elements have redundancy, meaning we have at least 2 of each critical network element. So we have invested significantly to make sure that nothing is linear or nothing is a single point of failure. And I can assure our subscribers that our redundancies are always on standby to be activated if we have any failure at any time.
So one would say that I shouldn't expect that this challenge would happen again. The economists will say all other things being equal.
You shouldn't expect this kind of challenge to happen again. We are investigating, and we are going to put all the measures in place to make sure that this kind of problem does not occur. As I said, there was a redundancy in place, and we moved to the redundant side. We are investigating to shorten the period within which redundancies can be activated, so that subscribers will not experience any disruption.
Some of your subscribers are also mad at you that during that process, nothing was communicated to them that this is the problem. What really also happened in that light?
I'd have loved to, engage our subscribers immediately the problem happened, to inform them that we're having this issue, but we couldn't send messages to our media partners. We couldn't also get in touch with them via other sources. And as soon as we could, we did put out a message out there to let our subscribers what has happened and what we have put in place, what we are doing to minimize the impact on the subscribers and make sure it doesn't happen again.
And that will be it for this evening's edition of the program, Business Live. Many thanks for watching, and do join me again same time tomorrow for another interesting package. My name is Emmanuel Abuaji Riafe. Have a good evening.